Good evening, everyone. Welcome to this week's special presentation, Climbing the Wall of Worry. I'm Jerry D'Ambrosio. Many investors have heard the phrase, climbing the wall of worry. However, they often have difficulty identifying whether the market is indeed in a blast-off phase that is climbing the wall of worry, or whether fear is justified and the upward move is nearing an end. So tonight, I'm going to walk you through all of the information that you need to make this assessment. And I'm going to be using VectorVest's objective and time-tested indicators that will prepare you no matter what lies ahead. And we're going to focus today on 4 resources that really give you a great understanding of what's going on with the market and how you should be reacting to it. So the first is the color guard. We're going to hop right into the program. And as of right now, the time of this recording, it's 10:17 a.m. on Friday morning. I'm using our VectorVest real-time program. And the first thing we do every day, it's front and center on the homepage, is take a look at the color guard. Color guard is going to give us an indication of the trend of the market, the strength of the trend, the breadth behind that trend. We're going to look at the underlying trend of the market, whether our confirmed call is up or down. So a lot of information right here on the color guard. What I'm noticing right out of the gate is that we have a lot more red lights starting to creep into the picture here in the color guard. That tells me right away that the market is currently falling. All of our indicators are lower on a week-over-week basis as well as day-over-day. The MTI is also quite a bit lower on a week-over-week basis. The MTI identifies the underlying trend of the market. So while the underlying trend is still up, again, falling quite a bit on a week-over-week basis. The trend column, we're in a down-up situation. So the short-term trend is down. I mentioned that the MTI is above 1, so the underlying trend is up. We are in a confirmed up situation. Now, the earliest we can get a confirmed down situation is going to be Monday. It's going to be Monday of next week. The buy-to-sell ratio already below 1. Monday of this week, the primary wave was down. So if we move forward to Monday, if the VVC is lower than $70.85, we will get a confirmed down situation. Now, as long as the market falls on Monday. And I'm going to say this now, and I'm probably going to say it a few more times here tonight. You do not want to ignore the next confirmed down signal. I'll explain why in a moment. But there have been certain things that we've been noticing on the market timing graph, which we'll get to in a second, and the color guard here, that just tells us that, we don't want to ignore this next confirmed down. We don't want to ignore any confirmed down, but now is not the time to be complacent. Confirmed down call just simply means take action, reduce your exposure, tighten up your stop criteria, protect profits. You could start playing the market to the downside if you choose to do that, but a confirmed down is an alarm. It means to take action, and those things that I just laid out are some options for you. Now, I'm going to open up this color guard and make it a medium. So we're looking at a small color guard. I'm going to make it a medium just because I want to show you guys the clear transition that we've seen over the last 3 weeks. Beginning of the month, beginning of November, the market was rising. Green lights, green lights, green lights. Then the MTI crossed above 1.5. That's a very important level, very significant level in the VectorVest program. When the MTI goes above 1.5, we begin to feel that downside risk outweighs upside potential. Now, what we saw pretty much immediately after that was some volatility, some uncertainty, more of a non-trending market here. When you see all 3 colors here in the color guard over a 6-day period, which we saw here beginning November 9th to November 15th, that just means that the market is consolidating, it's non-trending, and now what we're seeing is more and more red lights. So now we're seeing the rollover in real time. We're seeing that rollover in real time. And again, earliest we can get a confirmed down is going to be Monday. So that's the state of the market currently. I'm going to move us into a market timing graph. We can see that rollover clearly here on the market timing graph. I'm going to back us up to the actual high. I'm just going to zoom in here a little bit. So I got the VVC price at the top, the MTI here, the buy-to-sell ratio in blue. So at the actual high, things were looking great, right? MTI was moving up 1.54. Buy-to-sell ratio was at a really healthy level of 2.07. But the really important occurrence here is that MTI indicator crossing from below 1.5 to above 1.5. It actually did so on November 5th. So what were we saying about the state of the market at that time on November 5th. So I'm going to move us into the VectorVest views, and you can see what the market had been doing up until that point, right? We were on a streak of like 15 out of 17 days or something like that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 16 out of 18 days that the market went up. Were we, climbing the wall of worry at that time? MTI had just crossed above 1.5. Let's see what the VectorVest view said on that day. So I'm going to go November 5th. That was a Friday. And I'm going to read the strategy section. It says, inflation fears subsided this week as investors chose to focus on a slew of better than expected earnings releases. Overall, the VVC gained $1.86, a new all-time closing high. All three of our other market timing indicators also rose compared to last Friday. So that's what we saw, right, on that market timing graph. The market was moving higher. All of our market timing indicators were moving higher as well week over week. RT Kicker confirmed green lights on Monday, Tuesday, and Thursday, but the signal did not remain intact today. However, 3 of the top 5 one-day Derby winners are bearish, and that's a sign we shouldn't ignore. What is that? That's the best strategies in the Derby over the last one day. That day, Friday, November 5th, a day that the market went up. 3 of the top 5 one-day Derby winners were bearish. That's something that we want to pay attention to. If the market's going up and we start to have bearish searches performing well, that's a sign. That's letting us know, hey, pay attention here. The market's getting a little toppy. Also, over the last 5 days, from November 5th moving backwards, this 5-day stretch here, 1 of the top 5 5-day Derby winners was bearish as well. So some warning signals here, even as the market was rising. Let me fast forward now. So that was November 5th, November 6th, the market's rising. We kind of put the caution light on a little bit on November 5th because the MTI had crossed above 1, and we started to see some bearish searches in the 1-day and 5-day Derby list. I'm going to fast forward another week. This was Friday, November 12th. The market had rallied there for a couple of days, pulled back a little bit, really big down day on November 10th. Market rallied a little bit on the 11th. On the 12th, had a pretty nice up day. What did we say in the views on that day? So here is the strategy section of the views on November 12th. It says, despite renewed inflation woes, the price of the VVC managed to trudge higher again this week, adding 11 cents per share. However, while the VVC moved higher, our other key indicators, the BSR, RT, and MTI, did not. This bearish divergence suggests that downside risk outweighs upside potential. Downside risk outweighs upside potential. So that's what we said on November 12th. You know, even we had a little bit of an up day. If I go back to the home page, November 12th, we actually had a green light in the price column of the color guard, and the primary wave was up. But downside risk outweighed upside potential. And then just fast forward now, we've begun the rollover. Looks like the market's down. Mixed today, but the VVC is down 12 cents. A couple of more red lights here. So we're seeing that rollover, but we're starting to get you guys prepared. And we have been now for the last week or two, even longer, getting you prepared for a potential pullback. Look at the MTI and the buy to sell ratio now recently. MTI is at 1.11, buy to sell ratio and the RT both below 1. That's unfavorable levels. When the BSR and the RT go below 1, those are unfavorable levels. The earliest we can get a confirmed down is Monday, and I'll say it again, we do not want to ignore this next confirmed down signal. And I laid out some options, right? I'll do it again. Tightening up stops, taking profits, playing the market to the downside. I mean, going into cash at a confirmed down is always an option for you. You know, it just depends on your personal situation, but take action. So those are just a few of the resources that we provide our subscribers to help them assess the market every day, keep up to speed on what's going on with the market. Is the trend up or down? Is the trend strengthening? Is it weakening? Really, what's the market doing at any given point in time? We looked at the color guard, the VectorVest views, the market timing graph here. The last resource I want to talk about is our market climate graph, because there are macroeconomic factors that we feel drive the market. Those are earnings, inflation, and interest rates. And I wanted to leave you guys today with kind of the state of the union in terms of those indicators. So I'm going to move us into a market climate graph. Just clean this up a little bit here. And what we're looking at here is the actual, well, this is the 50-day moving average of the S&P 500 earnings per share. We take that earnings per share number from our S&P 500 watch list average, and we put a 50-day moving average on it. So it's the S&P 500 watch list average EPS, and it's a 50-day moving average of that number. Currently at 8.54. All-time high here, I can just pull us all the way back out, 24 years. Here's the S&P 500 50-day moving average of earnings per share. All-time high, but absolutely going gangbusters. Earnings continues to rise. This indicator at the bottom is what we call the ETI. It's our earnings trend indicator. It's on that 0 to 2 scale where above 1 is favorable, below 1 is unfavorable. So it tracks the trend of the S&P 500 earnings per share. Again, the 50-day moving average. It's currently at a level of 1.30. So above 1 is favorable, and the ETI is at 1.3. What does that tell us about earnings? That tells us that earnings is favorable. We can see that obviously here on the chart, but that's what it's telling us. That's what the reading is telling us, that the earnings per share, the trend of the earnings per share is favorable. So that's good. We know earnings is going up. There are two factors, though, two enemies of earnings. First is inflation, and the second one is interest rates. And I'm going to put on now our CPI. This is the current level of 6.20, but this is the current CPI reading of 6.20, and it is undebatable how high current inflation levels are. Higher inflation is bad for corporate earnings. The second enemy of earnings is interest rates, and we're using the 10-year Treasury note currently at a level of 1.56. Now, historically, we could see over the last 25 years, they're still low, but recently the 10-year note has been rising. It's currently at a level of 1.56, but you can see it's been going up. We also put a 0 to 2 scaled indicator on interest rates, and it currently stands at a level of 0.67. So that's unfavorable. Does the market like rising interest rates or falling interest rates? Do companies like rising interest rates or falling interest rates? They like interest rates that are low, falling interest rates. And you can see when rates are falling, the indicator goes above 1. When rates begin to rise, the indicator goes below 1. And at a level of 0.67 now, that is considered unfavorable. That tells us that interest rates are rising. Now, the Fed is expected to raise rates again, I think in September or November of 2022. But they've been rising here for the last year or so, maybe a little bit more. So what do we have? We have rising earnings, we have rising inflation, and we have rising interest rates. Where does that leave us, or what does that put us in terms of a bull and bear market scenarios? I'm going to move us now, and the last thing I'll do is take a look at an essay Dr. Delito wrote back in March of 2003. March 21st, 2003 to be exact. And I'm going to go to the overview section here, scroll down, and the title of the essay was called The Truth Chart. I suggest that you read this essay. Very informative, very enlightening about the different bull and bear market scenarios and how they're made up. So let's start on the truth chart here, and we're going to start with inflation and interest rates. We just saw on that market climate chart that both were rising. So I'm going to come down here, we're going to look at inflation, and it looks like in this row here, inflation's up, interest rates are up, earnings are up. And that's the scenario that we saw on that market climate graph. Rising earnings, rising inflation, rising interest. The market itself has been going up. What does that generally mean? Unfortunately, that generally leads to the end of bull markets. Now, I'm not saying it's going to happen next week or next month or even next year. These things take a long time to play out. But an environment of rising inflation, rising interest rates, rising earnings, rising prices generally lead to the end of bull markets. And why is that the case? Well, let's pay attention and focus more so on inflation and interest rates. As inflation and interest rates continue to rise, they eventually, the combination of those two things, eventually eats away at corporate earnings. And that's when bear markets begin. And that's case number 5. So it looks like right now we could be heading into a transition from Case number 4 to case number 5, the end of a bull market to the beginning of a bear market. But that won't happen. And it's not, again, it's not to say that it's going to happen on a dime. Sometimes it doesn't happen. They don't always occur in this order, but when bull markets end, bear markets begin. And that's the reason. Inflation and interest rates, if they continue to rise, they eventually eat away at corporate earnings, which signals the beginning of a bear market. And you can see the rest of kind of what happens if certain things change along the way. Bear markets end when earnings are falling, inflation is rising, but interest rates begin to come down. So I think it's really important to leave you folks with that perspective. What type of inflationary environment are we in? What is interest rates looking like? How are corporate earnings? And right now we're in that case 4 bull market situation. I'll say it again for the last time. Do not ignore the next confirmed down signal. So you might be at this point looking for techniques or strategies to help protect profits. Money management is the most important part of ensuring your survival in this game. So proper exit criteria, proper trade adjustment or investment adjustments during these situations, right, when the market is transitioning from an uptrend to a downtrend, from a confirmed up to a confirmed down. Well, next week on Tuesday and Wednesday, I will be holding a free webinar called How to Know When to Sell Your Stocks. And I'm going to go through a very effective approach using a technical indicator. So if you have time, you can go to the VectorVest views as of Friday night, or on the homepage, if you have the VectorVest events gadget on your homepage, you'll be able to register for and join that webcast. Again, I'm holding 2 on Tuesday, 1 on Wednesday. You'll see those dates and times in the VectorVest views as of Friday night. Again, you'll also see it on the homepage in your VectorVest events gadget. Thank you folks for joining me today. If you have any questions, please give our support department a call. We'd love to help you, and have a great weekend, everybody.
Yeah.